The 5 factors to consider when investing in rental property real estate. There are numerous possibilities for making a living with regards to real estate investing, all with different levels of risks attached to them. The greater the risk, the bigger the reward applies here, in that the real estate investment methods with the greatest risks have the highest potential profits. However, it is better to go slowly when it comes to real estate investing. Here, being sure is everything. In a venture such as flipping houses, lots of investors have made fortunes. This has been in the news far too many times. A few investors have lost fortunes too. It is only unfortunate that this does not make the news quite often. Investing in rental property is not very enticing, and it is not as lucrative as it is to deal in flipping houses. Flipping houses allows for instant profits. But working with rental property is also a perfect and very authentic real estate investing approach, generating a consistent profit over time if you plan properly. Rental properties have had a growing demand over the years. This is particularly true for family homes. In most parts of the world, people are losing their homes after going into foreclosure. This is devastating, knowing that they are losing what they have worked so hard to build for their families. For this reason, rental properties are pretty much selling like a hot cake. Owning them is not a mistake at all. People rent for all the various available reasons. And it is factual to say there are lots of risks associated with rental properties. The risks are of course much lower as compared to the risks involved in flipping or pre-construction investment endeavors. There are a number of things to put in order when purchasing a rental property strictly for renting purposes to ensure your decision for the real estate investment is well informed and highly achievable. First, investing in rental property works only in areas people crave to live in. You may be in position to make a completely cheap purchase in parts of town that are run down. It is, however, not a sure thing that you will rehab those properties into huge profit-generating rental units. You would rather invest a little more for a more appealing location renters would appreciate. These properties provide the confidence of being more inhabitable. In due time, it will make more money for the investor. Second, gather information on the type of people in the area and pay for the rentals that would be most suitable to them. Turning large homes into multiple smaller apartment units within the local zoning laws would work appropriately as hostels for institution students. Realizing that a particular area is meant in a strict sense for family homes and is less tolerant for the chaotic lifestyle of college students means you should think twice before you buy that next available home. What influences your design for rentals is the market you are attempting to attract. Third, have realistic expectations. The prime reason of investing in rental properties is of course to make profits. You only need to also remember that charging your renters very highly will let your house stay empty more often than not. For every month that your property sits empty, you are not earning money on your investment at best. You are also losing money at the same time at worst. Fourth, become fully acquainted with the market. Carry out diligent assessment of the local market where you will buy the rental property. Among many things, this will make you fully aware of where the property stands in relations to whether or not it will make an attractive rental unit. This will also help you determine the amounts to be collected month after month in rent. Finally, achieving long-term goals matter more than achieving the short-sighted goals. In other words, investing in rental property has its rewards at the end coming in the form of great profits. It is rather likened to being a marathon as opposed to being a sprint. The less the interest you pay off on a property and the quicker you pay off the property, the greater your chances of realizing the maximum profit potential. This will later boost your opportunities of acquiring new properties. And rightly so, that is the point in which a real estate rental property investor makes big money. It is not in renting out few units under 10, but in tens of units. Thank you for watching until the end. Hoping you found this valuable, subscribe to our channel in order to not miss out on our next uploads. See you in the next video.